morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is Santo Torcivia, an economist that focuses on the flooring industry and partner with Floor Focus. Santo, how you doing?
I'm doing fine, Kemp.
You have a market monitor that just came out. You sent me a copy of it. You do this quarterly, and so I thought there was some good nuggets in here. We talked 11 weeks ago when you first came out with your U.S. floor report, so it'd be good to give the market a quick update. You're going to cover the overall U.S. economic situation and focus on the positive things that are going on within the economy, and then just bring it on home with what's happened in the flooring business.
Sure. The one issue that continues to be the major issue is we're continuing to sail through a fog. There's so much uncertainty because we're in uncharted waters, because there's so many new things going on. And one of the new things are these tariffs. One of the main reasons for the tariffs is to open foreign markets to U.S. exports. I'm of the belief that that's not a big issue for floor covering. There's a few firms in the flooring industry that can do exporting, but by and large, the main companies in the flooring industry don't have the infrastructure that's needed to successfully export overseas. And I don't think those tariffs are going to help going out. They may help foreign firms coming in. We'll see when all these tariffs are finally done. The one little trick that you have to know with these tariffs are there are carve-outs. We've been contacting the ITC to find out what products are on these carve-outs. I saw a report by the National Bank of Canada. They calculated that the Canadian trade-weighted tariff rate for their products coming into the United States was 3%. And that's the result of carve-outs from the USMCA. And Mexico was 4.7. So they're way below the published tariff rate. And carve-outs cause a lot of that. And those are negotiated country to country. And we'll see what happens there. Inflation continues to be an issue. And until we see a drop in inflation, and I think we're starting to see it now, it's been stymieing housing starts. It's been stymieing, up until recently, commercial construction. And there's a possibility that commercial construction could lead the U.S. economy out of these doldrums. It's looking really bright for the education sector, the healthcare sector, the transport sector, institutional sector. All of these are looking like they're starting to improve, and this could help lead the economy out of its funk right now.
I interviewed Dave Trepke in L.A. yesterday. You know, he's thinking that 26, 27 might be pretty good. He's pretty positive about where things are headed now.
Yeah, right now, everybody's holding back. And that's consumers, that's businesses. They're not making any major purchases or major investments. And that's even though on the consumer side, real disposable income is growing faster than inflation. Spending is a big piece of the economy. Even with that, yeah, they're spending, but they're spending at a low rate. It's growing very slowly. I mean, until that kicks up, we should start to see that kick up as the Fed lowers interest rates. Now, they're the one black spot in the whole thing. I think the Fed's been late to the party with interest rate reductions. That's been holding back, unleashing at least the housing market. Once we see lower rates, we should see housing start to pick up, and that's another big piece of the economy.
You got to factor in the wealth that's been created with this inflation, with everybody knowing now that their homes are worth 2 or 3 times what they were worth 10 years ago, right?
That's right. It's the equity in these homes that people are beginning to use. If they go buy another home, and this is what's boosting some of the whatever housing growth we have, they're using that equity, if they're downsizing, to either lower the amount of their mortgage or to eradicate. They don't need a mortgage. They'll just go in and pay cash for that new house. Yeah, the wealth is growing, and it's growing a lot for the common individual in real estate. Now, that's also growing in the stock market. The stock market is very strong, too.
That's right. All right, so let's drive this home. You talked a little bit about what's going on in the flooring business. You make a call here that you think year to date, total flooring is down around 4%. Is that what you're saying?
That's right. And you can look at also imports are up 4.4% and exports are down 3%. And that's year to date through June 30th.
Well, let me ask you, what do you think the Feds are going to do next time? They're going to do a quarter point, half point? What are you thinking?
I think they've been signaling that they're going to do a quarter point, which I think is a little weak, but something is better than nothing. I think we need more than that. The Fed is always conscious of inflation, but inflation is, I think, around 2.5. So I don't know what they're really concerned about. We'll see what happens in the middle of this month.
Okay, Santo, well, thanks for giving us a read on what's going on with the economy and with the flooring business. Again, been talking to Santo Torcivia, an economist focused on this business, and you've been listening to Kemp Harr and FloorDaily.net.